Good morning, good morning, good morning. Hopefully, everybody had a nice, restful, and restorative night's sleep, ready to get after it this morning as we dive into our pre-market rundown for March 9th, 2023, going over all the news and notes necessary to keeping you consistently profitable here across these markets. I'm your host, Adam Holland, stock options expert, as well as expert market strategist. And we're here to dive in, right? Make investments in ourselves just like we do each and every day, and happy to be here and to do it. Without further ado, I'm going to go ahead and dive in. But you guys know, as always, yes, good morning, Carla. Good morning, Coco. As always, make sure you throw your ones in the chat, whether you're watching live or via replay, setting your intention, right, to get 1% better by the end of the session. That's always the goal. Anything that you do, you don't got to change the world, but you do want to get at least 1% better. So that's what we're looking to do here each and every session. And I have to say we've been pretty, 100% for 100% hit rate in terms of accomplishing that goal. So looking to keep up that amazingly impressive hit rate here today. But we're going to kick things off, right? Everybody else who kind of comes in a little bit later, you can watch via replay. But our top news here, another crypto calamity. So Silvergate Capital, ticker SI, plans to wind down operations, voluntarily liquidate billions of dollars in assets of Silvergate Bank, including the full repayment of all deposits. Shares of SI continued their downward descent on the news, plunging nearly 46%, pre-market to $2.64. Silvergate is also now considering how to best resolve claims and preserve the residual value of its assets, including its proprietary technology and tax assets. So in terms of backdrop, Silvergate launched as a savings and loan association in the late 1980s, reorganized into a community bank in the mid-90s, and pivoted into cryptocurrencies a decade ago. That's when it struck gold. At the time, no other mainstream banks were even thinking about crypto, and its assets continued to grow rapidly, especially after the launch of the Silvergate Exchange Network. The instant payment platform allowed clients like major crypto exchanges and institutional investors to send fiat currencies like the dollar to other Silvergate accounts at the time, even when traditional banks were closed on nights and weekends. So the hype surrounding crypto prompted Silvergate to go public in November 2019 at a share price of $13. And within 2 years, the price was up over 1,500% to reach an all-time high of $219. In 2021, Silvergate also attempted to launch its own stablecoin by acquiring Meta's DM technology. If you guys remember, Meta tried to launch their own, crypto coin called DM, but they ended up kind of walking away from that, and Silvergate Capital is the one who acquired that. But things were starting to sour on the industry. The crypto winter set in, and after nearly a year of icy conditions, Silvergate was dealt a severe blow when its digital asset customers withdrew deposits in the wake of FTX's collapse. We talked about this in the past on the past few pre-market rundowns over the past year. I'm talking about how, this kind of reverberation that would happen throughout the crypto market, and how a lot more, platforms and banks and crypto financial institutions were insolvent than we're letting on. FTX's crash, the crash of, Terra Luna, all of that kind of culminated in this domino effect that is now knocking down Silvergate Capital as the newest domino. So going deeper, several Seeking Alpha authors were warning about the impending doom for months, especially given the exposure to Sam Bankman-Fried's short-lived crypto empire. Contributor Blackfish cited red flags in November, serious red flags, questioning customer deposit concentration and loan quality, while Lister Analytics predicted an existential liquidity crisis after putting Silvergate's balance sheet under the microscope. Later in January, Silvergate said it would streamline its product portfolio, cut headcount, and reassess customer relationships, but it was not enough to stop the damage. The final red alert came last week when it discontinued the Silvergate Exchange Network and flagged its ability to continue as a going concern. So overall, just the newest domino to fall as crypto goes through this kind of rising from the ashes portion, but it's doing less of the rising and more of the ashes at this point. Regulation will continue to come in, which is a good thing, to stop things like this from happening in the future. But overall, it's one of those things where you need this to happen. There are plenty of companies that tried to do what Amazon did before Amazon was able to do it. The timing has to be right. Everything has to be right. And unfortunately, there are plenty of companies and platforms and institutions that have to fall on the sword for the next person to rise. And, you just add Silvergate Capital as one of those that has to fall on the sword in order for crypto to rise in the future. So again, not necessarily any type of indication on the validity or value of crypto. just more so an indication of, whenever there is a valuable sector, there's going to be people that come in, and if it's not regulated, they're going to set up, means of operating that don't have legs, that don't have longevity. And Silvergate Capital is just another example of that. Now, in terms of healthcare news here, we've got Newsom versus Walgreens. So we talked about how Walgreens is getting, California is waging war on Walgreens. DeSantis and Disney are not the only game in town anymore. California Governor Gavin Newsom has made good on his threat of not doing business with Walgreens, pulling a $54 million contract for specialty prescription drugs that was set to renew on May 1st. We're serious about not investing in companies that cave to the extremist agenda of the @GOP, Newsom tweeted, after Walgreens said it would refrain from selling abortion pill mifepristone in 20 states due to political legal consequences. Will the politics spill over into a corporate exodus as activism takes hold in the Sunshine and Golden States? We'll have to stay tuned to see, but obviously something that, is not good for Walgreens. And that we'll see how they end up kind of handling the situation. But in terms of trending news here, Scripted Betting reports suggest that the World Wrestling Entertainment, WWE, is in discussions with state gambling regulators in Colorado and Michigan in an attempt to legalize wagering, even though its match outcomes are predetermined. It's reportedly working with accounting firm EY to secure match results so they won't leak to the public, similar to how PwC deals with Oscar winners at the Academy Awards. One possible strategy would see wrestlers only clued in to whether they were winning or losing just before a match, but Seeking Alpha users aren't having any of it. It isn't just the wrestlers, production staff, producers, writers. They all have to know the results in advance of a big pay-per-view event, commented Austin Newsom, while others liken the new scheme to insider trading. It is insider trading. Let's be real. If you have the ability to bet on something that is predetermined, and a lot of people know that it is predetermined, it's literally insider trading. Like, this is just a way for everybody at WWE to get rich from WWE. So I don't think that they should be allowed to do this, because it quite literally makes no sense. You presenting an Oscar, or an award, probably 6 people have to know, right? The people that are on the panel, and that's it. Even if they have to know, they might not even know it. They just vote and blindly vote. So I think that's completely different than you setting up an event that entails you skewing that event for someone to win, right? The production people have to know if, Batista's going to win, or if, whoever. I'm not a big wrestling person, but they have to know, right? So overall, this just sounds like an elaborate scheme for insider trading. So we'll see if it ends up happening, right? Legalizing wagering. If it does, go tell your cousin, right, who's looking for something to do, to go work for WWE and get him to feed you the winners right beforehand. And, I'll take a flyer on that. To be honest, I don't really care. But yeah, Scripted Betting just seems very, very fishy. But WWE, fishy is kind of their world. In terms of global news here, War of Worlds. So again, not trying to speak anything into existence, but not trying to be an ostrich either. Sino-U.S. tensions are on full display this week. Chinese Foreign Minister Qin Gang has warned Washington of conflict and confrontation if it failed to change course in relations with Beijing, while paramount leader Xi Jinping accused the U.S. of all-around containment, encirclement, and suppression that has brought unprecedented grave challenges to our nation's development. Firing back at the remarks, U.S. Director of National Intelligence Avril Haines said that China remains our unparalleled priority and could leverage its dominant positions in key global supply chains to threaten and cut off foreign countries during a crisis. It comes after the Netherlands agreed to a U.S. request to impose export restrictions on China, limiting the powerful chips and deep lithography tools of Dutch company ASML. Their ticker is ASML as well. They are publicly traded, as a battle over silicon determines the technologies of the future. So overall, right, it is war that's happening right now. We are working to restrict China's access to chips, to weapons, to all the things that they need to grow and possibly challenge us in the future. And I think that's very, very important, right? They're not just going out and limiting stuff that we're sending to China. We're going out and we're limiting, China's availability to do business with other people. So we're actively limiting China, and it's, to some extent, I'm sure they're actively limiting us too. But all that points to is, again, mounting tensions here that are just boiling up and boiling up and boiling up, and unfortunately could come to a head. In terms of, let's see here, the pre-market levels, right, or what today's markets are looking like, that has changed. We were red across the board. Now it looks like we're likely to open green or at least slightly in the green, as we got some data to come out. Looks like we got initial jobless claims came out at 8:30 a.m. So we will check on those here. Let's see what we got going on initial jobless claims wise. It looks like the market liked whatever data came out, at least initially. So it looks like whatever the data was, there was, bullish repercussions in terms of the sentiment. Let's see here. All right, let's check. So U.S. initial jobless claims actual 211K versus 190K previous, estimated 195K. So it looks like jobless claims were higher than anticipated. That is bullish. That is bullish for markets. More people being jobless is bullish for markets because the Fed has two jobs: to maintain full employment and also to keep inflation low. Right now, as long as employment is strong, all they have to worry about is keeping inflation low. But as we start to see cracks in the labor market, that might give the Fed pause, to say, hey, maybe we don't hike as much, or we don't hike as often, or we don't hike with this, high of a magnitude in markets like that, right? Because markets like companies being able to borrow free money so that they can focus on growth. So overall, this is bullish, and the market liked that news, immediately upon hearing it. We are also, bouncing off of weekly uptrend support. If you tune into the pre-market rundowns, you will get the amazing pre-market rundown nuggets, and that's exactly what you are getting here. So overall, we are looking bullish, heading into today and really going into the rest of the week. As long as this trend continues to hold. So that is the T, right? That is the important information to be paying attention to be looking to leverage. So again, when that crystal ball hits and everybody is surprised that we end up rocketing, you're not surprised because you were here tuning into the pre-market rundown, time-stamped for free information that makes you money daily. Throw a 7 in the chat if you're excited for that, because I for darn sure am. And I just love being able to cultivate this, this environment where we're able to do that, because I did not have that when I was learning how to do what I do. I was on my own, thrown to the wolves, and had to learn through trial and error, as well as just taking courses and extracting pieces of information from other people. But it's very, very nice when you're in that position to say, I've got a good idea of what's probable to happen. I can place trades based on that, even when I'm just starting out. Like, that's an easy life right there. In terms of what else is happening, WSB survey results: TikTok should be banned, but will it be outlawed? Job openings fall less than expected. Quit rate ticks down. Norfolk Southern, ticker NSC, CEO faces grilling at Senate committee hearing. JP Morgan, ticker JPM, sues Jess Staley over ties to Jeffrey Epstein. Credit Suisse considered, ticker CS, considered sale of equities business and restructuring. World's largest producer of renewable energy calls this type a bad bet. American Express announced buyback boosts dividend by 15%. Focus on India. Apple said to be shaking up global sales biz. What have I been saying, right? India. That is the move. The exit from China and the interest to India is real, right? That is what's happening in terms of manufacturing long-term trends. WeWork, ticker WE, reportedly in talks with investors to restructure debt. And then Tesla under investigation for Model Y steering wheel issues. So Tesla had the Model Y steering wheel literally falling off of the vehicle as people were driving, which is not a good look, right? Not a good look at all. So be careful if you're out there driving a Tesla Model Y. But other than that, that'll wrap up our pre-market rundown for March 9th, 2023. Be positioned. That's all I got to say, right? It's about to be a beautiful day, a beautiful end of the week. Just make sure that you are positioned to profit. You've got your game plan and you are ready to execute, because that's what it's all about, right? Patience, PAYTIENCE. Don't let these little movements freak you out. Keep a focus on the bigger picture and you will succeed. It's as simple as that, right? But as always, if you got even any value from this session, just make sure you show love to the account, right? Like the YouTube shorts, like the TikToks, comment on the TikToks, comment on the reels, show love, right? You show love to me, I show love to you. We continue to show love to each other. And what do we all do? Grow. We grow, so do our accounts, right? So do, our bottom lines, so does our income, so does our revenue. So we can all work together to continue to grow, but it's us making sure that we have this complementary relationship, right? So if you got any value from this, just show some value back to me in any way that you can. I appreciate it, and we'll continue to crush these goals together. But I view this as much more than, a stock group or a stock gathering. This is about people that are looking to accomplish great dreams and close the gap, right? That's the be all end all. At the end of the day, you can make money and not accomplish your goals. I don't just want you to make money. I want you to do something that, establishes a legacy with that or is meaningful to you with that, right? Helps you fulfill your purpose. So we're here. We're moving. 2023 has been very lucrative. It will continue to be very lucrative. And I look forward to that. Have a great rest of the day. I'll see y'all back here Monday because tomorrow I'll be on a flight headed to Austin. So that's exciting. But I'll see you guys back here Monday for our next pre-market rundown. Have a good one.